All right, hi, I'm Brandon Baker. I'm going to give you guys a presentation on how to trade stocks, tips and kind of rules for trading, not investing, but trading stocks. Okay, rules for trading, before I get started, is you need to have money set aside for any emergencies, any things that might come up before you start trading. A typical fund set aside should have 6 months worth of cash in case something happens. Do not use money for retirement, for kids' college tuition. This is pure discretionary money that you're to have fun with. So rules are a little different. This is not investing. This is trading. What is stock trading? Stock trading is basically making short-term profits with holding a stock long or holding a stock short within a year or less. So your goal when you're trading is to make basically sales off mergers and acquisitions, off news in the market, off charts, off valuations. Most stock traders do not use a full broker like Merrill Lynch or the Bank of America. They do it through Scottrade, through Ameritrade, brokers like that. It's cheaper, it's less in commissions, and they're more in charge of their own portfolio. Okay, sectors. You're taught when you invest that your whole portfolio should be invested in different sectors so it's not all in one spot. When you trade, it's not the same. You should only have 1 to 3 stocks in 1 to 2 different sectors. So your goal is to get as much money as possible, as quick as possible. Most of the stock is going to go by its sector. The stock could be a bad stock, but if it's in a good sector, it's going to go up. That's very important. Mergers, acquisitions, and buyouts are a great way to make money in trading stocks. Your goal is to buy a company before a company buys it. So let's say, if any of you guys are following right now, Best Buy might be bought out. They're saying for $26 a share. Currently it's trading $18 per share. So if you believe it's going to get bought out at 26, you would make that spread from 18 to 26. But the problem is it has to get bought out. If it doesn't get bought out, then you just go flat or lose money. Trading one-time events is another great way to make money with stocks. If you guys remember back in 2010, there was a problem with the brakes on the Toyota Camry. It was a short-term glitch, lasted for about 2 to 6 months. But the stock traded from 85 down to 67. If you would have bought it and held on to it, you would have made about 42% at that time. So that's really a good time to buy. And most stocks actually will trade off for about 1 to 3 days and down about 10 to 15%, and they'll typically pop right away. One-time earnings misses. This kind of goes with the one-time miss. If you remember back, Apple of last quarter was the first time they'd missed in like 6 years or something. And if you would have bought that quarter, the stock traded down about 15%, and then ended up trading up about 2 months later, about 30% more. So it would have been a great time to buy. The only time you could actually buy is if the company is not in jeopardy, nothing's wrong with the business model, and the earnings are going to still be pretty constant in the future. The only problem is you don't know, so you're kind of playing a guessing game. So hopefully the company doesn't miss again. Politics and trading. An election year is one of the best times to trade, to own stocks. Most stock markets go up 10 to 20% during an election year, regardless if a Democrat or a Republican wins. If you think the Democrat is going to win for president, you're best off buying healthcare companies, you're best off buying green energy and certain technology companies. And if you think a Republican is going to win, you're better off buying oil, defense, and aerospace. The stock calendar. Hedge fund and mutual fund managers love to buy stocks a week before their quarter ends. So if you can find out when their quarter ends, and it's out there, it's public information. If you buy what stocks have been trading up for that last year, they will buy it to make their quarter look better. So if you go and buy, let's say Apple or Chipotle, what's been doing it all year long, if you buy it right before that end of the year or that end of that quarter, you will most likely make money because they want to show when their report goes out that they're actually owning winners. And in fall, that's a great time to own some technology and some retail. And in spring, it's known that you should always buy energy stocks. Momentum trading is basically what I've been talking about for the last few minutes. Buying stocks that have been up and staying with it. Don't pick what you think is gonna win, what's gonna be good. Pick what's up and stick with it. If you want, you move to the 52-week high list, and it will tell you what stocks have been up. As long as their charts still look good, as long as the business model is still intact, they're fine to buy. Don't pick winners, what you think is gonna win, pick what's there. I can't stress that enough. Sources to get information, obviously the computer, the TV, and from magazines. The best source of information, honestly, is websites. Go to Yahoo Finance, go to CNBC.com, and watch the TV constantly. CNBC. Make it a lifestyle. Constantly stay in the know. Suggestions to stay in the game because it can be very boring at times, and practice makes perfect. The more you do it, the better you're going to get it. I've traded enough where I've made some losses where I was like, why am I still doing this? But then there's trades that you do that are really good that you're glad you stayed in it. Hopefully your winners will be better than your losers. If not, you probably shouldn't do it. On average, it's going to take you about a year to 2 years to get pretty decent at it. You're not going to get good at it unless you practice and just keep doing it. Constantly research. I can't stress that enough. You might own a stock you think is great, and then all of a sudden, the next day it's not good. So, and make it a lifestyle, and the biggest thing, have fun with it.
6:20. Off, you're done.